Yeah, man. Quick fix. Okay, first of all, good evening, good afternoon, good morning, wherever you are, however you're doing. If you're watching this is Quick Fix here, a mentor from BVP coming at you with another installment of our BVP Zoom Sunday sessions, which happen every second week, which happen every 2 weeks. Yes. Um, so yeah, I'll be presenting today. Well, today, I'm not really trying to do too much talking and bore you guys out of your brains. I just really want to go through two nice and simple setups that I really enjoy trading, because I feel like they really test an individual, they test their endurance, and they test their mental skill and their mental capacity when it comes to the trading game. Because, a lot of the time, as traders, we get whiplash in a sense, where we so fixated on being in this trade that we overtrade while looking for one trade, and we just end up blowing accounts and all those. So these two trading models really test that patience and resilience of a trader. So I'd like to just share my screen. Yes, there we are. Okay. So this is a quick fix model one. I'm yet to give it a name, but yeah, for now this is what it's gonna be called, right? And let me just see if I can put a bubble there. Right. Okay. So now, when quick fix enters the market, what does he look for, right? So number one, liquidity. That's the first thing quick fix looks for, liquidity. Because once you have spotted out liquidity, you have spotted out, in a sense, volatile movement in which price is going to get, and a lot of institutional order flow. You understand? That's what you normally spot out when you're looking for liquidity. And what is liquidity for those who are still new? Liquidity is a range of impulsive movement. That's what liquidity is for the ones listening for the first time. So it's just a range. Let me just type there. Range in liquidity, right? And then now, next thing we do is spot out the highs and the low, right? So in this case, before any of this had happened, we understand that this will be the low and that will be the high, right? So this in quick fix world will be named your yeah. And this will be our so yeah, this is nothing too hectic, so okay, so number two, we're mapping out what next, our highs and lows. Right? So now once we've located our highs and lows being our buy side liquidity, sell side liquidity, now we understand our range in a sense and our direction, right? Because it's important to know your direction. And what I like about this model in a sense is that it's very effective on the 15 minutes to 1 hour time frame. So just to put it in there. To time frame. Yeah. I just like to have that as a note right there. And like this usually comes across very effective throughout the 15-minute towards 1 hour time frame. Well, it does do justice sometime within the 2-minute, 5-minute range, but that's just depending on your market conditions and where you are in the market at the time. So yeah, so number one, we map out what? Our liquidity, our range in liquidity. Then we map out what? Our what you call this highs and lows. So it'll be your buy side, sell side liquidity. And based off of where we are in the market, then tells us what we would do next, right? So, okay, cool. We see price from its low, from its high. So this is what we'll now call our range. I like putting it like this on my chart. This is the range, right? This would be our range. And with this being our range, I know that anything traded by the midway point is foul, I would say. So I would look not to trade within this area. If price were to somehow gravitate into this area, we would not look to be trading it, you know, price were to somehow do something like that, you know. Once price has reached sort of this area here, we don't look to trade that because we understand price is at a very equilibrium phase. It's in an equilibrium phase. So we don't know whether it wants to go bullish or bearish. As compared to once we've marked out our highs and our lows, we understand that, okay, cool. From our high, we're just fetching what? Our low. From our low, we're just fetching what? Our high. And based off of market condition and the type of candlestick pattern that forms, sometimes we could go from high to go lower, retest and go even lower. Sometimes we can come from the low to go high, retest lower to go even further up. That's just the basis of it. But then simple fact remains is that once we've reached this area in the market, we do not trade it. We either wait for a pullback into premium or a pullback down to either side liquidity, right? So, okay, so next move. What would Quick Fix be doing next? Let me just remove these for you so you can be more clear on everything. Okay, so this having to map out the range is really optional to you, but then I'd like to just add it there for emphasis. Map out range, right? And now, what I really want you to pay attention to now after this third step is now the scaling in. So from here on out, this is where we now begin to scale in. This is where we begin to scale in now. So now you draw your attention towards where? Towards this area in the market, right? So once you've gotten to this area in the market, what I like to call it is I know it sounds corny right now, but it shall evolve. It shall evolve. I like calling it the three-headed dragon. So the three-headed dragon meaning what? A lot of the time, once price has done this, we normally have like an order block sitting somewhere around here, right? So we'd have an order block chilling right there, right? And from order block, in order to know that we are now doing the what you call this, the quick fix model one, is that we'll have a buy side. We have price forming a buy side, breaking, forming a buy side, breaking, forming a buy side, failing. So I want you to pay attention to the last one as we say failing. So price usually tends to fail to break this high. Understand? So what it would do is it would purge lower retest into our order block to continue back downwards. And this is where we'd enter off our position right here. Would enter our position right here. You see stop loss being just slightly above of this area, just in case we have contingency. Next, you have your what? Your target. And you just let the market run. So now when it comes to trade management, what I like to do, remember what I had said about this midway point of the range. What I like to do is that once price has reached this somewhat like area, it's either price will come into break even or will have stop loss and profit. Basic trade management. Normally we'll have it just underneath where price loss purged to come and retest back into the order block. And then that's where we'd have our stop loss and everything would be Gucci, you know? So this is just the first model that I want you guys to familiarize yourselves with and to, just give time, and allow yourself to learn and grow. Because yeah, it does take a toll on you having to wait and see price sort of like run away from you, especially once we have like this first purge, this break of structure. And then we have it, go all the way down to only come back up and break our structure here. Because normally we are told that no, wait for price to tap into our order block or fair value gap and then sell or buy, whichever bias you have. Sell, buy, sell, buy. But what happens is in this market, we tend to have I would say a rally. So I'd like to call this the rally, where price will, in a sense, fake out a lot of people, right? Because you should understand that this synthetic market is how can I put it? It's like a virtual market. It's like it mimics the real world market. So a lot of emotion type of movement happen within this field, if I could say. Because if you look, we have a lot of impulsive movement, which does account for orders being filled and, people stop loss being hit. You understand? So we understand that a lot of this fake out movement will happen a lot, right? Which is why it's important to remain on your hands, keep your ground, remain strong. Like I said in the beginning, a lot of the times, this trading model will test you out as a trader and as an individual because it takes a toll on your mental, but then it's very important for you to just pay attention and, remove a lot of the emotion from the trading. You know what I mean? So, okay, that's model number one. Second model I'd like us to go into is something looking like this. It's nothing too crazy in its own. Something looking like that. Bam, 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 bam. Right. So once we're in a market like this, and I love this one to bits. Once we're in a market like this, we understand, okay, cool. We have this sort of like sell side liquidity, if I were to put it like that, which you mark it as our what? Break of structure, right? And then we'll have what? Our buy side liquidity. Normally, which would be broken to break of structure. And then we have basically, I'd say our hot pocket. Yeah, I'd like to name it hot pocket. Quick fix hot pocket. And our hot pocket, a lot of the times, is where you'll see formations of fair value gaps and order blocks, right? Right? So a lot of the times, this is what we see that forms here, right? So this is pretty simple. You come out here, first thing you do, you always do, learn this from Quick Fix. Liquidity. Please, I emphasize, ladies and gentlemen, let's look for liquidity when we're trading. Let's not just enter the market, right? And then next we'll have our what? Buys and and lows, right? Next, we look for what? It's gonna be break of structure, right? So initially, what I mean by break of structure is that a lot of the times you'll find the position maybe here, to where just imagine all of this cut out, but you'll find price here a lot of the time, and then you would have probably got your swing high and your swing low. And then once price is here, like again, I'd like to implement the whole concept of the date range, right? So the range, basically. A lot of the times, this happens around the midway point. This, a lot of the times, likes to happen at the midway point. So just like the other model, we understood that, okay, cool, we've reached sort of like the midway point of the range. And obviously, we could expect price to be moving in a very odd way, in a very odd manner. So we see price obviously bouncing off of that area to what? To clear buy side liquidity or swing high, thus turning into a break of structure. From break of structure, we're going to have this very impulsive movement all the way down to break the sell side structure. So in this case, if you're looking for a sell side position, we'd have a break of structure here, along with some form of shooting star candle. We'll have something, what is this thing? Yeah, around about this area, we'll have some form of candlestick pattern that would form. And basically from here, we're just waiting for what? Break and retest, break and retest. And that's the one factor that I wanted to tie to the both of these models, is that a lot of the times, if you look, we're just waiting for a break, retest, break, retest. It's nothing, it can't be as simple as that. Break and retest. So obviously we'll have this break of structure, and then we have a very impulsive movement up to what? To retest where? Into our hot pocket. As plain and simple as it is. We just want to see ourselves entering off of the hot pocket. Same thing for bullish movement. You understand? So yeah, that's really it, to be honest. Okay, let me just leave this here for you. So whoever wants to check it out can check it out. Just move that to the side. So yeah, key takeaways to take away from this Zoom session is that number one, I emphasize again, wait for break of structure. Number two, map out what? Liquidity. Number three, map out your what? Your highs and your lows. Your swing highs, your swing lows on your lower time frames. And then you have your buy side and sell side on your higher time frames. And then break of structure. Please, let's not forget break of structure. Because a lot of the times we find ourselves entering in places like this in the market before any of this has formed, or any of this. We find ourselves entering markets like this, hoping to capitalize. Yeah, we enter markets like this with large stop losses and very small returns and small rewards. And a lot of the times you're going to have your stop loss taken out, or you're going to have your trade taken out due to margin, which is not ideal from a trade management perspective. But yeah, I'd really like to see traders doing better when it comes to risk management as times go on. So yeah, liquidity, highs and lows, break of structure, hot pocket. Those are my go-to four, and those are the go-to four I feel like could really help you in your foundation phase as you move forward. Going back to the other one, highs, lows, range, scaling. Pretty simple, very self-explanatory. Can't really say or do too much. But yeah, if there's any other reference you need, For the ones watching on YouTube, make sure to comment, and we'll get back to you ASAP. For those in the free Pip Hub, make sure to watch this, and just get back to us with questions in the chat room, all this for free. Once again, I'd like to emphasize, free Pip Hub, free chat room where you can come and speak to the BBP mentors as we go through this trading journey together, So yeah, that has been Quick Fix, man. Hope you enjoyed. Hope you found it very fruitful as much as I was going different places. But yeah, that's why we have a platform for us to speak about things like this, right? Yeah, man. That has been Quick Fix. And as we head out, a reminder to everyone watching this that perseverance, man, like, especially in this field and in which we are in, a lot of the times you see people coming in, making loads of money, withdrawing, but can't do it again, and they just lose that love and that will to become professional traders. And to who's watching this and would like to become a professional trader, grit, I'd like to emphasize grit, passion, and determination, because now another analogy I'd like to put you on is whatever you're doing right now that's making you money, would you be willing to sacrifice the money and wake up the next morning and say, you still have to do what you have to do, but you're not getting paid? If you still enjoy it and you still want to do it, then that's your passion. That's something you love. And it's important to find something that you love. It may not be trading for the ones watching. It may be trading for others. But it's important to find that sort of balance point for yourself to really find a sense of freedom, and just live your life accordingly by your rules, the way you want. It's possible, especially in this field, it's very possible. So yeah, that's just the knowledge I'd like to part into you guys as I dip out. Maybe not maybe, but then I will be back 2 Sundays from now. Actually, 4 Sundays from now. Wow, that's crazy. Quote me on that, but yeah, for now, just stay prayed up, stay blessed, hey, and as we go into the new week, heads up, and let's see those blue screens, So yeah, man, that has been Quick Fix. In and out.